All right, my top dividend stock to buy now in May is Visa. I'm going to share with you why I think that's the case, what attracts me to Visa stock, and why I've recommended and why I personally own Visa stock as well. So let's jump right into it. Let's take a look at this excellent company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I've had Visa rated as my top dividend stock to buy all year in 2024. I made this recommendation on December 30th, and you can see so far year to date, Visa has outperformed a broader S&P 500 dividend stock ETF. You can see Visa so far has delivered 4.61% compared to the broader market dividend ETF at 3.28%. So if you've invested in my top dividend stock, you would have outperformed a broader market ETF based on dividend stocks in the S&P 500. But why has Visa outperformed? Well, there's a lot of reasons for that. But why did I like Visa stock? Namely, because of the strong competitive advantage, the lack of fierce competition in the industry, and very strong profitability, which is an outcome of those first two factors I mentioned earlier. Now, Visa may not have the best dividend yield. It offers investors a dividend yield of just 0.72%. But I think longer term, Visa is an excellent stock to own to earn dividend income and have the price increase over time. Visa's payout ratio, which measures the percentage of earnings per share it pays out in dividends, was just 21.67% in the latest announcement. So that means Visa has plenty of room to increase the dividend payout should it choose to. It doesn't require significant reinvestment into the business because it's a capital light business model. The difficulty for Visa's business was establishing its widespread network, getting consumers and merchants to use their cards. That was the difficult part in Visa's business. Nowadays, it doesn't need to reinvest all that much capital into the business. It's already done most of the hard work. Now, the hard work is in defending its business. Defense is the name of the game for Visa, not offense anymore. It already has more than 4 billion Visa cards in people's wallets or on people's phones. And now the name of the game is defense of that strong market. And so far, it's got good work on that progress, right? It works with MasterCard. I shouldn't say it works with MasterCard. Indirectly, they don't really compete fiercely against each other. They're not lowering prices. In fact, Visa and MasterCard get blamed all the time for not competing against each other. Businesses and consumers complain that these two don't fight against each other. Consumers like when companies fight against each other to try and take market share because they lower prices, offer better services, more incentives to customers, and that hurts companies' profitability. But Visa and MasterCard don't do that. They don't fight against each other like that. They're smarter than that. They say, you keep your market, I'll keep my market. Let's all generate strong profits. And business groups are not happy about that. So they're on the borderline in terms of lack of competition. But from an investor perspective, that's good news. That's the side of the equation you want to be on. You don't want to be on the other side of the equation when you're in an industry that's competing fiercely and everybody's lowering prices and everybody's experiencing falling profit margins, falling cash flow, and all the things are going against you as an investor. So this is the side of the equation you want to be on. And Visa, over the next 5 years, the analysts that are following Visa stock, they expect it to deliver 13.38% in growth in earnings per share compared to just 11% for the S&P 500. It's rare to find dividend stocks that are expected to outperform the S&P 500 in earnings per share growth because that's really what happens with dividend stocks. They use their money and return it to shareholders rather than using that money to reinvest in the business, and that sometimes leads to slower growth. But that's not the case with Visa. Visa is able to generate strong growth despite the fact that it returns capital to shareholders in a significant fashion. Part of the reason for that is the strongly profitable business. Visa generated in the latest quarter 5.35 billion in operating income on revenue of 8.775 billion. That's a strong operating profit margin. If you divide the operating income by the net revenue, Visa's operating profit margin is among the highest of any business in the world. That was in the latest quarter. It's true for the last 6 months, and it's been true for the last 6 years. Visa's consistently demonstrated strong profitability and expanded that profitability over the years. That's what's led to a very, very strong return for investors. And Visa stock, while I will admit it's not cheap at a forward price to earnings of 24, I still feel like it's an excellent bargain for dividend stock investors to buy an absolutely excellent business, arguably a best-in-class business. I put Visa up there in the Hall of Fame of the best businesses in the world to invest in, and you're getting it at a fair value. You're not getting it at a cheap value, but you're getting it at a fair value, which I would be more than happy to pay for an excellent business. I mentioned already I own Visa stock. I've owned Visa stock for some time. I also own MasterCard. I like the fact that they don't compete fiercely against each other. They both generate strong profitability, and they've got excellent prospects going forward. The more and more people shop, the more and more Visa and MasterCard benefit from that trend. They also benefit from rising inflation because Visa and MasterCard, Visa specifically, take a percentage of spending that use its cards. And so as you spend money using a Visa card, they generate a percentage of that revenue. And if you're spending more money on the same basket of goods, then Visa generates more revenue. So they just get a nice tailwind from inflation longer term. And unfortunately, I think inflation is going to be around for many, many years and many, many decades to come. Maybe not at the level it's been in the last few years, but I think there's going to be inflationary pressure for the next several years and the next several decades. It's just part of the nature of how governments conduct fiscal policy. It's not popular for a politician to come out and say, I'm going to cut spending and I'm going to raise taxes, which is sometimes required to tame inflation. Almost every politician wants to come out and say that they're going to conduct fiscal policy that is expansionary, that is giving money back to the population or reducing taxes or giving out more incentives. They're rarely going to come out and say, we need to tighten our belts, we need to cut spending, we need to raise taxes, and we need to get serious about our deficit spending. When do you hear that? It's extremely rare, right? It's not popular for a politician to come out like that. It doesn't get very many votes. And so I don't think that's likely to happen. And so inflation will likely persist for several years and several decades, and Visa will benefit from that trend. Overall, I'm reiterating this recommendation on April 30th, reminding everyone that I still think Visa is the best dividend stock to buy today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.